Good morning, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is August 12th, 2012. This video is going to be a bit different. It's going to be more of a Q&A video. I normally don't do this because I normally don't get any questions. But a person or a user had sent me a question, and I feel like I want to help as much as I possibly can. So in this video, I'm going to answer this question, and I will. Well, this person sent it to me through email, so I don't want to reveal. Sorry, it's still early in the morning for me. It's 7 o'clock in the morning, anyways. Who this person is, but basically, he or she is asking, you know, I just wanted to ask you, and this is hopefully I'm understanding this correctly if you're listening to this video, that you currently have some shorts and you are long on the VIX, and you've been looking at other analysis videos or other people's videos that either do, I guess, technical analysis or fundamental analysis, and they're saying that the indicators are showing that the SPY or the SPX, which is the S&P 500. I'm assuming you're talking about the S&P 500 and not the SPY. If you are talking about the SPY, then it would be at 145, I assume, or the SPX at 1450. I'm assuming it's going to be the S&P 500, which is 1450, and they're the same thing anyway. So, anyways, do I think that that it'll get there? Because you're not sure if you're going to stop out of your position or not. Well, here's the thing. Okay, so what I'm about to say or what I'm about to explain is purely just my opinion. I'm not making a recommendation whatsoever to buy or sell anything. I mean, this is, you can consider my videos like a vlog. It is, I look at charts, and this is what's going through my mind, and I'm just letting you guys know what I plan to do. Now, in no means am I saying to anybody to do this or to do that. I mean, obviously, you guys have to make the decision. You guys do your own analysis, and there's if you lose money, basically, it's based on your decision to buy or sell or hold. Okay. Um, the first thing that comes to mind is, for me, you have a stop in place. I mean, you already, before you even make a trade, you already have a stop in place. And the reason why we have stops is it's to protect ourselves. Um, Using technical analysis or fundamental analysis, in my opinion, the most you can be is 90% correct or 90% sure a specific stock or ETF will go in the direction that you want it to go. The reason why I use 90% is because there's no way anybody can be 100%, especially in the stock market, right? We all know that sometimes our analysis works and sometimes it doesn't. But the key is to be more right than wrong, and the key, also the very most important thing in my opinion, is money management. If you do not have money management, then in my opinion, it would be very, very difficult to be successful in this type of career, I guess you could call it, if you wanted to, or hobby or whatever. Um, and it's simple. I mean, we all play poker. Well, some once in our life we play poker or chess. Okay, so I'm going to relate this to poker just for a second here. Now, in poker, in the game poker, if you watch TV, I mean, you're down to two players, and one player has 90% chance of winning the game, and the other player only has 10%. But they don't know what they have in their hands, right? So one guy goes all in, and the other guy calls, and now they both know, oh, I only have a 10% chance of winning, and the other guy goes, hey, 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 I got 90% chance of winning. This is my money, right? And then in the stock market, you never want to think that way. You never want to go all in, and you never want to think that you're going to be 100% right, because you won't be. Unless you're psychic, in which case you wouldn't be watching this video. But to make a long story short, in a lot of times what I see is that 10% guy. I mean, more than likely the 90%, the one who's holding the cards and has a 90% chance of winning, is more than likely the winner. But I do see more than once the 10%, the one who has the remaining 10%, actually wins the game on the river card. Okay, so bottom line is, if you have that 10% of uncertainty, you need to protect yourself. The first way is, to learn money management. And money management is very important. You don't want to go all in like the poker player did, because you still have that 10% chance of being wrong in the move. So if you went all in and the market goes in the opposite direction, then you get hurt really bad. Okay, so think of it this way. Um, if you went 100% in, okay, what is the theory here? Okay, I'm going to mention this. I can't take credit for this money management process because I did not learn it on my own. It was taught to me, and I'll explain that to you guys a little later. This video might be a little bit long because I might get into a little bit of a ramble. I do apologize, but I want to make sure that I'm clear. Um, okay, so um, basically, to make it simple, say you okay, say you have $1,000. So keep it simple, all right? Okay, let's make it $10,000, making it simple. You don't want to spend more than $10,000. So you have $10,000. You don't want to spend more than $1,000 in any single one trade, and you don't want to lose, say $100 in that one trade. And so if you kind of see the pattern, a $10,000 capital, and you only spend $1,000, that's only 10% of your $10,000. Now, you say you had a stop up to $100. So not saying that you need to put a stop at $100, but say up to $100. So that's why you always have to know when your stop is before you even make the trade, because if it's over $100, then it's going to be over 10%. So let's just say, you put a stop at $100 at worst case. Okay, so you spend $1,000 on a specific stock. Obviously you have a lot more money and a lot more capital, but I'm just making this simplified. You lose only up to $100. What is that to your capital? $100 is only 1% of your capital, right? Now let's just say worst case scenario, this company goes bankrupt the next day for whatever reason. At most you lose 10%. Okay, at most. I mean, the stock disappears, you lose absolutely 100% of your investment on that one specific stock or ETF. I wouldn't say ETF, but that whole stock. Then you only lose 10%. But let's just say you stop out at that $100, which is your stop. Then you only lose 100%. Sorry, 1% of your capital, and that's what I believe in. I learned this, and I'll explain it to you who I learned it from later. In any case, the thing about that using that mentality is one way of doing money management, and I'm sure you have your money management style as well, which is perfectly good, I would assume. But in my opinion, the point I'm trying to make is you have to have your stop. Once you have your stop, you abide by your stop and you stop out. Even though you think, oh, well, I think the next day I might, oh, well, I think the next, no. I mean, yeah, sometimes if you don't abide by your stop, you might be right and it may turn over into the direction you want it to go. However, more than, okay, so let's just say 9 out of 10 times you're right and you actually make money by not, listening to your stop. All you need is that one time to wipe out everything. Okay, so that's why it's so important to abide by your stops. So now, to answer your question, okay, so that's one of the things that I strongly believe in is once you set a stop, you abide by it, you get out, and you reanalyze to get back in. Okay, so now to answer your question about on the SPX going up to the 1450 or the S&P 500, let's take a look at that. All right, so I did a quick analysis on the SPX. I normally don't like to do it on the SPX simply because I can't see volume on the SPX. It's the S&P 500. That's normally why I do the analysis on the SPY, simply because I can see volume and volume is very important to me. But let's just say I take volume out of the picture. The 1450 claim is around here, and you know what? If you look at it, that's not far off. That's a possibility. See, another thing I want to make clear when I make my videos is when I do talk about shorting or I do talk about going long, what I'm thinking about is short term. I want to get in and get out as soon as possible, make the quick buck, get in and get out. I don't like to hold on to things too long. I'm a swing trader and sometimes a day trader. And when I hold things for too long, that's when things, start turning sour for me and it goes against me. If I do decide to hold things, what I do is once I'm in the money, I already have a break-even stop, meaning even as soon as I'm in the money, I'm already putting in a break-even stop. In my opinion, once you're in the money, there's no reason why, there's no excuse for me to be losing money unless the next day it gaps down, a big gap down for whatever reason. Then that's a different story. But The thing is, there's no reason why you should be losing money. If you're already in the green, you put in a break even stop. So if the stock turns against you for whatever reason, you get stopped out, break even, and then you can reanalyze to get back in once again. Okay, so let's take a look at this, the SPY at the 1450 level. Do I think it can get to the 1450? Yes, I do think there's a possibility. In general, I think anything is a possibility in the stock market, but just using technical analysis and what I'm looking at here, yes, there is a possibility of 1450 is in the books. I mean, I'm not in the books, but in the cards, it's definitely a possibility. I mean, what we see here in the short term, okay, we have a low here, we have a higher low, we have a higher low, higher low, higher low. Okay, this is a confirmed uptrend. As soon as you have two higher lows here, that is a confirmed uptrend. Okay, so you have a higher high, and a higher high. This is a higher high, and then once again another higher high. So this is considerably an uptrend, right? So why would you fight the trend? I always say the trend is your friend, but you see that this is what I'm talking about. This is short term, because this is a daily chart, and we still have not closed above these two highs here yet. So you could actually consider this whole area here just one sloppy, choppy move higher. Okay, so until we close above here, I'm not really sure if we can get to the 1450. Okay, so that's the way I'm looking at it. Now let's take a look at it in a longer term. All right, so these are two trend lines that I drew on the SPX, which is the S&P 500. And if you look at the 1450 claim of the videos that you've been seeing, if you're watching this video, is right around here. Is that far off? No, it's not. Look at that. I mean, this is the weekly chart, right? It's pretty much a straight shot higher. We have a low, right? We have a higher low here. We have a high, and we have a higher high here. This is a uptrend, right? Okay, so you have a lower low and you have a higher high. That's considerably an uptrend. We also have here a rising triangle. Okay, I mean, it really depends on how you draw your trend lines. I mean, we always talk about the differences in opinion of drawing trend lines, and originally in my previous videos this could be considered a bearish flag here, but it looks like that it's a pretty, it could be negated very soon. The bear flag could fail, and I did talk about that in the previous videos, that if this gets taken out and we get a confirmation above this area here, I think the bear flag would have failed. And when you have a failed pattern, you have a big spike to the upside, in which case 1450 would not be out of the picture. Now when I say I'm short the market, it's more of a short term. Let's go take a look at the SPY. Okay, so if you look at the SPY, we do have these mathematical calculations here that have been working out pretty good for me. I mean, obviously they're not 100% as you guys have seen in the previous videos, but they have been working out in the lately. And right now we are in this rising wedge pattern here, as you can, it's clearly, sorry, it's more clearly seen in the weekly chart, right? But so we may actually get a bounce to come back down here. And then, like I said in the other video, last night's video, or the previous video to this could be definitely considered as a bull flag, right? It really depends on how you look at it. If you're considering this as a top, right, and then you have this up move here, and then now you just draw a trend line. Well, that's not really a trend line. Actually, you could draw the trend line like this. This could be a bear flag, bearish consolidation. It doesn't matter how you want to look at it. So yeah, 1450 is not out of the picture, meaning there is a possibility, and that would be on the SPY around here at a 145 level. Okay, so that's I wouldn't say it can't happen. It's definitely a possibility. So where would my stop be? Okay, so everybody knows that watches my video. My stop, actually my short position, ended up here. Okay, and that's because I thought that the markets would turn over, and obviously it didn't. And right now what I'm seeing is the volume's keeping it from doing so, but it doesn't mean it can't go any higher. I mean, the feds, and with all the manipulation going on, I mean, that's definitely a possibility, and I just want to make sure that I protect myself with a stop. So basically, if any close above this trend line, and any close and a confirmation above this trend line, I'm out. I stop out, I reanalyze, and I re-enter in the market, at a better price, and I take a small loss. And that's how I do it, simply because that protects me from anything that goes against me. Okay, so I hope this helps. I hope this explains to you what I'm thinking. So to answer your question, yes, I do believe that there is a possibility that the S&P 500 can get to 1450. That's definitely a possibility. I cannot rule it out. Okay. Um, but as of now, right now, until I get a close above this upper trend line here, I'd have to be a little bit bearish. And who knows? I mean, next week is options expiration, so the institutions are going to have a lot of game playing. So the institutions may, pop this guy out next week, and to get everybody bullish, and then just bring it right back down. Okay, so that's a possibility. Or starting from Monday or Tuesday, we might just see some downward momentum from there. Or again, like I said, the Feds, it really depends. If Uncle Ben says, "Oh, I guess we'll do QE3 next week," then yeah, we're gonna get a spike in the market, and then I stop out, and I take a small loss and I re-enter. Right? That's how you play the game, in my opinion, and that's how you protect yourself. I mean, it's just like chess, right? You always have to look for the unexpected and plan for any possible moves and be ready. Because if you're not ready and if you're not prepared, then you'll end up losing the game. And again, the game, in my opinion, this is a game to me. My game is not against you guys. My game is against those institutions, those Goldman Sachs, those big boys who take money from the institution, from the retail trader, who take money from the unknown. I mean, I know so many people at 401ks that's lost so much money. It's like, you know, they take the money from them. It's unbelievable, and I don't like that. And so I really want my competitors are those guys with a lot of money, those guys with the certificates. They're considered professionals. I'm not. I never claimed to be a professional, so take it for what it's worth. Oh, and to make a long story short, I'm gonna end this video now, and I hope I answered your question. But I get tons of emails from people who say, "Oh, come by 3-day trial. I'll teach you, options." And then, when Priceline went down, okay, some people made money, some people didn't. And whoever was short the Priceline made a lot of money. Whoever bought puts made a lot of money. I mean, made tons of money. The whole thing is a lot of people get trapped in those things. I mean, think about it. Okay, I mean, just think about it. You spend $500 a month for these services. If they were really that good, why would they need your money? Why would they take your $500 a month? That's how they're making the money. They're making the money from people who subscribe to them. Okay, so just be very aware of people like that. But I'm gonna contradict myself now. Okay, I used to be one of those who signed up for services and stuff like that, and I got burned. You know, on multiple occasions. Okay, so there is one site that I wouldn't say it's a recommendation, but I would maybe recommend that you guys look at. Obviously, you make your own decision, but just check it out. It's run by run by a group of people, but there's two main traders on that site, and the first trader's name is Nick Santiago, which in my opinion is a very good, and I would call him a professional in my opinion. Very good trader, and he makes a lot of money, and he does have concern, and they do work very, very hard for their users, for their subscribers, and it does come with a fee, but at the time of making this video, the fee is very, very reasonable. I think it's only $50 a month. Okay, that's it. I mean, you can already tell that they're not after the big bucks. They make a video every single day. They make a weekend video. They also have services which are included that you can actually talk to them through a webinar or web chat twice a week. The second trader is so there's Nick Santiago, and then there's Gareth Soloway. And Gareth is more of the aggressive, the more risk taker type trader, but he's very accurate. He's very good. And I guess the question is, why do I make my videos if I like these guys so much? Well, they have their own methodology, and in my opinion, everybody's methodology works for them, right? And it probably works for a lot of other people too. But their methodology one doesn't work 100% for me. So And that all boils down to how you draw your trend lines and this and that and that and this. So what I do is their methodology, or part of their methodology, is what I use in combination to my methodology. And I also have other people that I do like, and I kind of get their strongest indicators, I guess you could say, and just combine it all into one. So basically, it's like the Highlander, right? You go out, you chop somebody's head off, and you get their power. I'm doing the same thing. I go out to the traders who I think are the best right now. I mean, that I know of, and I get whatever I think is the strongest points of what they have, and I combine it into one, and I make these videos. These mathematical calculations, however, are not from anybody. These are mine. I did discover it on my own. So Nick Santiago was one of those who inspired me to actually investigate into finding one, and I was fortunate enough to find one, and it's been working out pretty well. Um, and again, that's from inthemoneystocks.com. That's inthemoneystocks.com. There's, I believe, a 7-day free trial. So you sign up, and I did test this, so you don't have to worry about it. You sign up for 7 days. If you cancel on the sixth day to be safe, then you're good to go. You don't have to pay the $50 fee. They also have a $200 a month. At the time, I think it's $200 a month to jump into a webinar if you're a day trader, and you can day trade with them. Okay. And to be honest, the only reason why I'm talking about them, the only reason why I'm saying to look into these guys is simply because their services are very well done. They work very, very hard for you guys, and they are reputable, meaning the trades they make actually turn out to be about 90% correct. Okay, so again, the only reason why I don't post my videos on their forums is because they have their own methodology, and they're very strict about following only their methodology. So as much as I want to help those guys with my mathematical calculation and my analysis, I can't do it out of respect for them, and that's why I don't. But they are very good. They're excellent. I do believe that they are professionals, and I do not believe that they're in it for the money. They're in it to try to honestly help us retail traders, kind of like how I am now. And that's the only reason why I'm mentioning them. And anytime anybody asks me where to go through my emails on these from these videos, uh, even though I really do appreciate you guys watching my videos, to be honest, my whole purpose is to help you guys. And if in the money stocks .com helps you guys, then you know, more power to you. I am no way affiliated with them at all, not even close, not even whatsoever. But it's just a company that I found that seems to be very good. Okay, and so again, it's not a recommendation to sign up with them. It's just something that you may want to consider. All right, so I hope this answers your question. I'm gonna make another video shortly after this one. So, thank you very much for watching this. And if you never come back again because you'll be stuck on the inthemoneystock.com site, then it was nice knowing you. And, thank you very much for stopping by in the first place. And I hope this video helped you. All right. Uh, Take care.